Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. Today's video is going to be summarizing the second week of October, and it was a bit of a wild one. So we ended last week at 132,447, and this week we end at 132,735 for a £3,700 loss, which equates to minus 2.7%. Now, I did make some additions this week, but let's look at the main reason why the portfolio went down. So at one point we were up just over 3.5k, but then we saw a sharp decline on Friday, and the main reason was this. Trump announces 130% tariffs on China. The global trade war just came roaring back. So if you follow the markets, you know that in April this year, Trump introduced tariffs for many countries. The main one, because it's so important in global markets, was China. And if you look at my portfolio early on this year, this was around when it happened. So as you can see, there was a sharp drop. Obviously, the markets recovered later on. Now, every time Trump has done this in the past, 3 or 4 times, the market recovered by Monday. And for me, it was a buy the dip opportunity, which I did do on every occasion, and I did quite well off it. Now, as an investor, you should be taking these opportunities to make purchases when there is a dip. It's up to you when you want to do that. You can front run it, like buy it now, or you can wait for it to potentially get deeper, which it might do this time. But at some point you should be deploying capital, because this is when the big wealth is made, when companies drop in price, not because their own fundamentals worsened in some way, but because there was something like a tweet which affected the whole market. So let's look at what happened this time around. So Donald Trump announced he would impose an additional 100% tariff on goods from China, on top of the 30% tariffs already in effect starting November 1 or sooner. The threat is a massive escalation after months of a trade truce between the two nations. Now, this is not necessarily a bad pullback either, actually. The markets were at all-time highs, and the fact that it's dropped a little bit means that people can make entries into the market at more favorable rates. So it's not necessarily a bad thing. Now, all of this happened around 4 or 5 p.m. UK time, and I wanted to buy a particular stock which I couldn't resist before that. So actually, I trimmed a few stocks within my portfolio to fund this new purchase. So I actually did well off that, but I bought it at the pre-tariff rate, as it were. So I lost out a little bit on that. But after the tariffs happened, I did make some additional purchases just to take advantage of this dip. So let's look at the stock that I bought. And it was a stock called IREN. Now, what is IREN? So essentially, IREN is a data center business, and it also mines Bitcoin. And it does this using renewable energy. Now, AI has been at the forefront of this massive rise in markets, and it's quite well known that there is massive amounts of compute required for this. And companies that have data centers, or the data center market segment, is rising and will continue to rise. So I wanted to have some exposure to that market. And the fact that this company also mines Bitcoin, which is also going to go on the up in my opinion, then it made a compelling argument to be within my portfolio. So this is one that I added. Now, if you look at the recent share price, it has gone up quite a lot, 76% in the last month. Now, it's not normal for me to want to buy companies that have gone up that much in the last month, but I think this trajectory will continue. And this is one of the reasons why I've bought it now. And how did I fund it? So let's have a quick look. So I made a £2,500 deposit, and I also trimmed some HIMs. Now, this is a company, it's going through a bit of a rough time, if truth be told. The share price is always affected by short activity, which is pretty high on this stock. Generally, you get short activity of about 5 to 10% on a company, but this one is nearing about 40%-ish. So there's pressures on the stock to be pushed down. And a lot of the time when the share price goes up, there's a piece of news that comes out, sometimes regurgitated, sometimes new, just to push it down. So that's also not helping, but I managed to trim for a little bit of a profit, £56, and I sold 45 shares. Also, I trimmed a bit of Google. I trimmed 14 shares for a £773 profit, just because Google was a little bit overweight within my portfolio. It was about 18% of my portfolio, which was quite big. And I thought I'll take out some profits off the table, which is never a bad thing. And I decided to buy the IRN shares. So I bought 48 shares pre-market, and then later on I bought 50 more. And then the news of the tariffs came into view, and I decided to add to 2 positions, which obviously dropped. And those were Robinhood for £1,000, getting just under 9.5 shares, and UNH, which I always wanted to add to actually, which I bought another £1,000 worth of shares. And this was me buying the further dip. I thought I have to practice what I preach, and when markets dip this much, I have to be deploying some capital. So I decided to deposit another £1,500, and I bought some more IRN and some more BNMR. Both are new stocks within my portfolio, but both, I think, at least at the short term, have a good trajectory. So that's why I wanted to add. So this is my current IRN position now. And as you can see, obviously we're down because of what happened on the markets on Friday. But I currently have 117 shares with a current value of 5,216. And I think this will recover very quickly and do well. Now, if you do want to contact me privately, if you've got any questions, queries, or feedback that you don't want to make public, then please contact me on investingwithal99@gmail.com, and then we can have a conversation there. Also, what I might start to do is, if I get enough interest, I might be able to notify you guys when I do make a buy, because obviously now I do weekly videos, so sometimes I'll buy earlier in the week, and by that time markets can move really quickly and theses can change. If you want to follow me for more live updates, then as I said, if it's of interest to people, then just message me then, let me know. Now, going back overall to the portfolio itself. Now, when we were up at this point last week, my portfolio did hit a milestone of having a 100% rate of return since I started in April 2021, but obviously that's dropped a little bit, but we still are on 81.7%. I'm really, really happy about that and how it's going. Now, if we look at the individual stock P&L for the week, obviously with the overall portfolio being minus 2.7%, we're going to see a lot of red. So which ones were the biggest affected ones? Let's look at that. So Oscar minus 13.62%. Then we have ASML 9.31%, KLA at 9.76%, BMNR 8.47%, and there were some green, which is quite surprising actually. It was Costco, Hims, Imperial Brands. Actually, that is not a surprise actually. When markets do go down, tobacco stocks usually go up, so they can be seen as quite good defensive stocks. So if you feel that the market is going to be due for a bigger pullback, which some people are saying could be the case, then buying tobacco companies would be a good way to counteract that. IRN was 17.3%. Now, I bought it on Friday and I didn't get any of that gains, so I'm not going to really include that, but those were the 3 that were up for the week. And if you look at the value of all the positions so far, so I trimmed a bit of Google, so that reduces my holding to 86 shares from 100, which I'm fine with. I took some profit off the table at an opportune time, accidentally actually. So I sold it essentially at the top. So I got some good gains out of that, and I've deployed it in other areas. And the main reason was that my Google position was quite overweight within my portfolio, and now it's very healthy actually at just under 11.5%. Robinhood up 27% for a £2,454 gain. I did add some extra shares to this company, which I believe will do very, very well going forward. IMB, as you saw, it was one of the few stocks that were up within this market dip, up 75% for a £4,000 gain. Meta up 20% for £1,409 gain. Now, also, I want to say one thing about buffer zones, essentially. So if you wait long enough and you buy good stocks, the stock prices will go up, and then you will have situations where you're up 75%, 37%. So even if there is a market correction, and remember, these are prices after the market correction, then you can still pivot away when things go badly or sentiment or thesis changes. So this is another reason why you should be investing for the long term, and you can pivot away from adverse situations. Visa up 10.29% for just under £700 gain. MasterCard up for just less than £500. Microsoft up 30% for a 1.5k gain. Carnival up almost 85% for a £2,850 gain. Nvidia up 67% for a £2,485 gain. Oscar Health with the pullback still up almost 15%. Tesla up 86% for a £2,637 gain. BMNR down 7.5% almost. But this is one in the short term I think I have high conviction on. Broadcom up almost 70% for a 2k gain. IRN, my new position, down £550 for a 10% loss. But again, I think it will recover. United Health, which I've just added some additional shares to, pretty much break even. HIMS down 7.5%. Grab, again, another new position, which I think will do well. And I do want to point out that a few of these stocks are outside of my pie. Now, I want my pie to be as beginner friendly as possible. So it's quite solid in its nature. But there are companies outside of it, which I do have, which I feel are a bit too risky for newer investors. So if you do have a bigger risk appetite, similar to myself, then what you can do is, if you are a pie copier of mine, then you can copy the pie and then add these outside of it. You're perfectly entitled to do that and have the same risk portfolio as I do. So Amazon up just under 13%, Centrica up 50%, Costco up 15% for a £300 gain, Apple up almost 25% for a £391 gain, ASML up just under 12% for £81 gain, and KLA up 21% for £122 gain. So that is my portfolio, and I'm an investor that's actually not overly worried about things like big market drops. I think it gives you a chance to buy good quality companies at a discount, which is what you're looking for. And I embrace them, and it's fine. And I think also bear in mind, the market has to drop for it to continue to go up. It can't just go up in one straight trajectory, because then it triggers other things that may mean a bigger collapse further forward. So these momentary drawbacks or pullbacks are actually fine. So thank you very much for joining this video. Please give it a quick like so other people can see it. Subscribe to follow my journey. Hit that bell icon so you're notified when I release a new video.